419 this morning on the SPY with a close last Friday around 421. So we're going to see if the pressure remains to the downside. I posted in Discord some of the just kind of simple pattern projections. If we have a head and shoulders, it's playing out towards a measure move around 411. We have a pretty hefty earnings week with U.S. equities, around 620 companies, I believe, reporting earnings. And anyway, we'll talk about all that this morning in the Pulver report. Risk disclaimer, know there's risk in trading. Please always use trade capital only. You know the deal there. If you're following me on social media, best place to find me is Twitter at Chris Pulver, or live sessions and any videos in my video playlist on YouTube, youtube.com/Chris Pulver. Let's jump to the charts. Here's the SPY, 419.50. Let me have a look and see where my key levels are for this morning. Any major volume that sticks out. Posted notables in the Discord channel. These are some of the companies. Big names, 620 companies reporting earnings. Big names: Microsoft, Google, Amazon, Meta, UPS, MasterCard, Visa, Chevron, Cleveland Cliffs, one that we have, Coca-Cola, a lot, right? Meta as well. I think I said that one. Yep. So just highlighted some. We have some credit spreads and some option plays in some of these, some stocks we own, like Cleveland Cliffs. See if that's up or down. We have some protection on those. Ford, same thing. So we'll be watching those all this week. Is that enough to kind of give the markets the lift that they need? Is it going to keep good earnings or not? Just drives the market a little bit lower, and then we wait about a week and a half for the Fed. Right, this is our last full week of trading for October, and we get into finishing up the month on Tuesday. The Fed is the 1st of November, which is expected to be a pause. We can confirm that right here. More than likely, this CME watch tool has been spot on since 2009. And here you go. 98.4% that there is a pause. There is actually no sliver of even a rate hike. So 1.6 was a cut. But anyway, 98.4, likely that's going to be the case. Powell had some pretty terrible messages for the market, but really it's the same. The guy's been saying the same thing. So anyway, today trading around 419, 418. Gap fill around 421. If I can get something short term enough, I might look for a gap fill this morning, or I just wait and see if my measure move is correct, where if we hit this 411 level, maybe 411 to 410, look to see if we have a bigger rip to the upside. So if we have high to low, lower high to lower low, lower high to lower low, we kind of finish out this move. 410, is that a fair spot to start looking for something back up in the channel highs? Like I said in my analysis, I think if we get to 410 or 400, that is a critical support zone for the bulls. If the bulls cannot defend 410 or 400, I would say there's a lot of trouble ahead if we break below 400. So if this week is a continuation move down or a capitulation move down, it's going to feel pretty ugly. But at the same token, if we get some type of bullish candlestick, I think there's at least some momentum there. Maybe we erode most of the gains. In fact, I'm curious if we finish that move. Let me go back to see where that would take us for the year. No, don't do that. Where would that take us for the year? Get this chart up here on the SPY to go where we started. Where's my yearly pivot? There's my yearly pivot. So if we came back down, everything would be like single digits. So we started right in this area. I mean, right now the SPY is up about 9% for the year. And if we push down towards 410, push down even towards 400, we're talking, 4 to 5%. So that would make all the money market traders, investors, all the fixed income investors pretty happy to be like, see, I beat the stock market. So anyway, all good. Let me log into YouTube and say good morning, everybody, and let's get into the routine. All right. QB dominate in the chat there. Okay. How about you don't have to repeat the question 10 times. Are you like spamming my chat right now? All right. Good morning, Chris. Good morning, FK. Donna, good morning. Angela, good morning. David, Catherine, Jason, good morning. All right. I'm I'm going to ask the QB to bounce for a second. It's a little aggressive in the chat. Morning, Gary. Morning, Trish. Morning, Larry. Nice to see everybody. All right. Morning, traders. Happy Monday. Here we go. Okay, so 418.72. Like I said, going back to the clean charts here, projected head and shoulders, which was off of this move. If this is our head and shoulders, we looked at this a couple different ways. Either this was just a clean channel, high to low, lower high to lower low. Because the bulls failed to bring us back up into this 444 level, that would have been the lower high to lower low kind of look. Since we failed to do that, and I connect these levels, you can see how this market rejected right here. So it really was just a clean neckline rejection, right? This low, connect the dots. That's our neckline. And then we broke the neckline, rejected the neckline, and we are falling lower. So projecting the move, a head and shoulders move, is to high to low. You take that move, and then you go from the break of the neckline, which I didn't connect that very well. Go for the break of the neckline right here, and then project that move lower. So this yellow box is the same length. Let me copy this. I'll show you. So the same length high to low right there. Okay. Copy that high to low, paste it from the break of the neckline, and that's how I had that projected move around 411. Now, that doesn't mean we have to stop there. Doesn't mean we have to get there. But roughly speaking, I mean, it's pretty amazing sometimes when these patterns play out. The symmetry is almost spot on higher time frames. So, 410, 411 would make sense. That's the measured move. Anything aggressive to the downside would be just the extra momentum and capitulation. But I don't know. I mean, November 1st, I mean, if this, like I said, if it gets ugly this week and we go into the Fed next week on Wednesday, that might be the turning point for the market to just, have some type of saving rally for the end of the year. It certainly doesn't look like nor feel like it should. But at the same token, if there's going to be anything optimistic for November, December, I think a lot of it would pivot off the Fed and their language, So we'll find out. Morning, Herschel. Morning, Jacob. Morning, Chris. Okay, so let's have a look. Another one that we should pay close attention to is the DXY on the higher time frame. Again, I think that if you're starting to see some signs of topping on the dollar index, I've said this, if we break below this 105.50 level, I think the dollar index is another reason that the stock market to start to bottom out a little bit in the near term. We have to see confirmation though, right? I mean, right now the momentum is clearly to the downside. So what's going to be tricky this week is how aggressive do we go lower? And I'm paying attention right now to 421 because there's a pretty noticeable gap. If we don't fill it today, it's possibly something the market wants to go after for the year or for the week. I'm sorry. SOXX 451. That must have been a scan. Get off. SOSX. What is that? Oh, semiconductors falling. Okay. NVIDIA. All the hype falling. Right. Again, look at the topping pattern here. Nice head and shoulders, breaking the neckline, measure the move. I mean, we could probably project an NVIDIA move as well. Doesn't mean I'm going to short it. Just means that once we had some big pushes to the upside, take that measured move, draw that neckline right in here. If we're breaking that neckline, I would just project this move lower. So you can project symmetry first and foremost, right? And that still puts NVIDIA down to around 385. But if it's a head and shoulders pattern, you're looking for a rejection off the backside of the neckline, and then this projected move gets us back into the gap around 320. So the tough part is I mean, I think there's a high probability short position on NVIDIA to come back and fill this gap. It still maintains kind of bullish posture. This would be, this huge trend to the upside, a corrective move against the trend, coming back into 350 or 300, and I'm sure there's some buying interest there, at least in the short term. We could talk about this today in Equities on Demand. What's a reasonable time period to look to short it? I mean, I would just take an options play. Problem is, it's an expensive stock. The option prices are kind of ridiculous. I mean, they're more expensive than Netflix. We looked at Netflix and kind of passed on that. It was, $1,000 down just to take essentially a one contract trade. Not super interested in doing that. So I don't know if there's something inexpensive. If I did like a, I don't know, like a 380 or 375 long put, something, out of the money, and maybe it trades at like a 25 delta or something like that. Give it till, I don't know, end of November into December. But if we time that incorrectly, we're just going to waste money. So I really don't feel like chasing it. I'd rather just play the SPY, get some short-term flow, stuff like that. But anyway, go back to the SPY, the DXY. I think these are a couple things that are going to be critical to pay attention to. Okay. If the dollar index gets below 105.50 and we push lower, that correlation of a weaker dollar should help the stock market stabilize and bottom, right? The dollar could still get stronger. It doesn't mean this has to be the top. I mean, we could have something like this where it comes in here and then rips back to the upside, finds this yellow zone, and I'm looking for a topping pattern. So I've been telling traders this in my trading rooms. I'm actively looking for a top in the dollar right now, a near-term top. Now, how it plays out, what type of price action we get, I don't really know. But if we get below 105.50, I think it's worth taking a stab at to sell. Stop loss is pretty tight. If it's correct, we come right back to the midpoint of this broadening pattern. If it gets momentum, then we end up looking at a broadening pattern low, and that's a huge slide in the dollar. And we would start to see, I would think correlation-wise risk appetite coming back, and the equities market can rally because of that. So critical spot to watch in the DXY. We're paying close attention to that. The JPX is the Japanese index as well. That's not, what is it, JYX? Uh, Japanese index. There it is, JXY, my fault. JXY. JXY trading at 66.70. Again, curious on this one. Also, FXY, if there's anything. Now, this really has nothing to do with the dollar necessarily, but coming back into the October 2022 levels before we start to see a bottom in the FXY, if we have, the dollar yen, for example, if that's kind of our barometer currency pair, we're trading at 149.93. That 150 to 152 intervention level is going to be important to watch over the next couple of weeks. We talked about this. If I zoom in, there's a big BOJ intervention candle that we should be paying attention to this week. So it's right here. You can still see the candle. If I take this down to a 15-minute time frame, let me zoom in on price a little bit. There it is, right here. So this is not a, misprint in data. This is the high to low, and what I'm going to look for this week. And again, I don't really know what the catalyst is going to be necessarily. Forex trades 24 hours for 5.5 days. But if we start to see price pushing lower now, I'd like to see price actually cooperate and just start breaking these lows and breaking the structure. And we actually have a fair shake to sell it. As opposed to we have a 100 pip 1 minute candle within seconds of a flash crash. I mean, that's not in our control. I don't know if that's going to be the price action we see this week, but I would be watching for, if we test this high and reject, I think there's a good chance for sellers to look for some type of technical move to the downside. Again, it's a pretty good reward to risk. If you're able to get a decent fill, stop loss above, you're looking at maybe maybe a 50 to 100 pip stop loss for a 300 pip area to the downside. And if that range breaks, double that move when we're talking dollar yen back to 145. So are we going to see it? I don't know. If we do see it, expect it to be fast. One thing that we can say with the cash rates and the carry trade right now, the JPY is still at negative 0.1%. So anything that's going to favor Japanese yen strength is going to be pretty fast. Okay. All right. Oil, gold, silver. Oil's sitting there at 87. We'll look to see how this plays out. We're coming back up to the yearly pivot, possibly. We took a kind of an in the money, a cheap risk. It's a low risk USO trade last week, so we'll watch that one. Gold and silver. I think this week gold could get faded. Again, looking at how this is. I mean, this has been just a massive rip on gold, which has been pretty impressive. And we did take out this recent structure. So I think if gold is faded just a little bit, I'm not interested in shorting it necessarily. I'm more interested in if we get a pullback here. I'd like gold to settle back in and see if gold can, give us a chance to buy a dip. I like this kind of 1920 to 1900 zone. We can look and see if we have left structure here. right structure here. Maybe we could look some trades on GLD this week. So let's talk about that this morning. I know we wanted to talk oil, gold, silver on Friday's class last week, so let's definitely do that at 10 o'clock. Let's talk GLD and SLV if it looks good for a pullback, right? And higher levels, 2075, 2080, major resistance on gold that goes back to 2020 and 2022, and again we had the recent high this year in May. So I don't know, I'd be careful on buying, because we could have this big rip to just flush out some shorts, and then the shorts can get reestablished with resistance up here, and then gold drops. So again, why would gold fall? Could be improved inflation readings. Gold could fall also with rising equities. I mean, the one reason it's been an interesting, last 3 years or so, I think 3 years, the U.S. dollar's up 18%, gold's down 5%. So that's a huge difference in payout, right? So like U.S. cash has been treated pretty well, certainly the last 12 months. And overall, the dollar is just a currency that's performed pretty well. So we'll keep an eye on it. Okay, silver. Silver, technically, I like better than gold. I've said that for a long time at this point. Structure's a little bit off. I mean, I was looking for some type of correction in here. Seems to still be holding, but my concern is this channel has been kind of broken and become a little bit more messy. So again, could silver dip again? Possibly. If silver can maintain this posture, which is really, I mean, I don't want to see it go too much lower than like 20 bucks. Okay. Ben, you're killing me. I'm nursing a bit of a basketball injury from Saturday, so my dog is testing my abilities this morning. Anyway, I don't want to see silver drop too much lower than like $21. If there's any rally, especially on a weaker dollar, I'd like to see silver maintain this bullish posture. It'd be awesome to see silver get back up here towards $29 to $30 and see if we can have our SLV positions correlate with that. If so, maybe we start to see SLV get up to $26, $27. My break even on SLV is like 17, so no complaints if I can turn 8 to 10 bucks a share in that position. And there's a pretty nice rip off the SPY. We're at 418. We've already got a $2 move in the last few minutes. We got 1 minute for that 5-minute candle to close. We're looking at like a $2 move on the SPY. Again, it's just noise. I'm gonna try to get the feel for the week and see if we can find anything good. A lot of earnings this week. Other than that, I think the calendar's pretty light. Okay, dude, seriously, QB, you need to like chill out. I don't know why you're just dominating my chat so much. I'm happy to put you in timeout, so just take it easy, okay? Euro dollar carry trade. I mean, everyone should know the interest rates. We talk about this all the time in the trading rooms. Let me get my doc out here. Yeah, it's all good. I mean, I appreciate the enthusiasm, but I don't need to see like 10 comments. So central bank rates right now, I mean, essentially everything's a carry against the yen, which is probably why it's so stubborn and not getting stronger. But I don't really like the pseudo like close proximity carry. So when you're talking euro dollar, I mean, euro's at 4.5% right now. The dollar's at 5.25, 5.5. Sure, you can get like that 0.75 to 1%. Part of the positions I'm in right now, it's a lot of positions that are long against the Swiss. So Aussie versus Swiss, you're getting a 2.5 to 3% differential. CAD versus Swiss, Euro, Pound, New Zealand dollar versus Swiss. Obviously, I could be trading against the yen, but the yen it's just a whole another animal in currency trading. The yen is not something I want to scale into, dollar cost average into. The yen is, right now, if we see yen strength that comes towards the end of the year, it's something we can take a stab at. There's a lot of pips to be made. There's literally thousands of pips to be made on Japanese yen pairs, but just expect super high volatility. The one way I'm also trading the JPY is through this instrument, the FXY. we just did a long call. And the FXY long call is if we're right, and I think we have an expiration out to March of next year. So if we have like a December, January, February move at all to the upside, then the FXY call, I don't know. I don't know what we paid for it. A couple bucks maybe $1.50. And I think that could be worth, $4, $5, $6 at some point. But, also we accept the risk as well. So there's ways to play it, and then carry trade wise, like I said, know your central bank rates. I like the ones that are a little bit more favorable. So euro versus dollar. To see that, you got to watch the DXY, and all I'm looking at for the pattern is this. If I'm right with this, this is high to low. We've had a broadening pattern. Broadening patterns can be a little bit tricky because the bulls see breakouts, the bears see breakouts, but the reality is that this is a broadening pattern. This just heads lower. So it does look to be, a little toppy on the DXY. To me, the confirmation is we got to break below 105.50. That's what I said earlier. If we start breaking lower on the DXY, that's what gives the equities market a chance to rally. That would be more risk on trading. So I'd expect the euro, the pound, the Aussie, New Zealand to do well against the dollar. If the dollar drops, those four currencies I just mentioned would be positioned pretty well for dollar weakness. Okay, Bitcoin, I didn't have any chart alarms going off, but obviously not complaining that we're at 30,000 and change right now. Gold's had a pretty good run. Bitcoin's hanging in there. Chart alarms are set, 32K. There's 25. It's just under 25,000. I mean, again, I don't know, if we can get it, if we can break that 32,000 mark, but if we can, I would say all of your Bitcoin bulls are going to be out and celebrating. How aggressive and how bullish does it get? I'm not really sure. Could it be more of a structured channel move like this where it breaks up and hits 35, 36 and then pulls back again? But I would say structurally, if we break above 32, number one, right, we can hit 32 and then fail again and come right back down to 25. But if we can break and close above 32, any pause here, I would say there's going to be some loading to the upside. That's 45, and then we have 68. So we'll find out. But trendline support right here, if it holds. Initially, we had trendline support there that I thought was breaking, but clearly it didn't break below 25,000. So something to watch, something to get I don't know, interested in. I'm not going to say excited, but there's big pockets back here. Bitcoin could fill this pocket around 36, 37K. I'm just going to set another chart alarm up here. That high is 48,000. I mean, I would certainly be excited. Have some exposure on Bitcoin, trading some stocks and options. This is a ProShares ETF BITO, and I own this around 13 bucks. And then I have some GBTC. Own this one also pretty cheaply. I think I own this one around 15 bucks. And this one's, I'm going to check my break even on this one because GBTC is making fresh highs. So this one's already making its run higher. I'm not sure if we have bigger equity money pouring into something like this, like GBTC, but this from a percentage standpoint is up around 200%, and that is way higher than actual Bitcoin. So that's pretty crazy. You look at the same move, Bitcoin from low to high is up around 95%, and then you have what's supposed to be a correlated instrument that's up 200%. So obviously happy to have some exposure on GBTC, and we're going to let this bad boy run. And then some mining stocks. MARA is looking like it doesn't reflect Bitcoin pricing at all. Crypto stocks gain as Bitcoin hits 3-month high, and then you look at this. This is a mining company for Bitcoin, and it's down a ton. So interesting correlations. It's down 64% off recent highs. Huh. Well, that's why it's not all eggs in one basket, right? So BITO, some exposure there. If we can crack these highs, that would be at almost $18. But yeah, GBTC is cranking. No complaints. And I think I own this in this gap area around 15, 16 bucks. So not too shabby. BTC bumped 31,000 last night. Did it? Oops. 30. You're right. Yep. 30. That's right there. Let me see what the high was on this price feed. Got a high at 39.88. So it's right there. And again, like I said, I mean, I don't want to get too ahead of myself, but 32,000 is not just the test. I mean, if the alert goes off, that's great. But I want to see, this pocket get filled. I want to see price making a solid break, right? Solid break above. So we make a break above, we pause, this resistance becomes support, and then I think the bulls, really start to gain some traction and this thing gets bid. So we'll find out. By the way, SPY's filling the gap, 418 to 421, closing in quickly in the last 15 minutes. So that's why you just chillax and just watch the day unfold. Okay. All right. Let's go to the SPY and the Qs really quickly. Just to recap, we got a few minutes here before I head out to stocks and options trading room. So I'm going to make this really simple. All right. 420 this week. SPY 420. Let me type this out. This is what I'm going to be watching. Okay. We have 620 companies reporting earnings. We also have, companies in the Mag 7 and the enormous 8 in this list. So your Google, your Amazon, your Meta, right? Those are big enough companies with large enough market cap. If they have good earnings, beat on earnings, beat on revenue, that might be enough to lift this market. Critical levels. SPY 420 support. If 420 support holds, we still have channel structure right here that I'm staring at, right? I know I measured down this head and shoulders to 411, but if we hold 420 support, we could rip all the way back to 440 and 445 and hit this channel. If it holds. Okay? So if it holds, room to 440, 444. Measured head and shoulders move to 411 and 410. I'm going to go down here. DXY 105.50. Critical support. If 105.50 breaks and closes lower, DXY weakens. Look for equities rally and risk on trading. Okay. Another thing I will be paying attention to this week, I mean, the yields have been a really important thing. The 3-month, the 2-year, the 10-year. The 10-year has made huge gains to close up the gaps where we were inverted like over 1% for a long, long time. We're still inverted, but it's been reduced to like 0.2%. So the steepening yield curve has had a lot to do with some of the big sell-off in equities. Jerome Powell's comments have been consistent the same. Higher for longer rates, softer labor market, softer average earnings. All these things are going to be like bad for the consumer, slower growth, right? So his message is the same. That's my point. But technically speaking, two things I can watch and help me make some decisions. Critical level on the SPY, which is the broader market. Critical level on the DXY, which is a critical basket. So this is what I'm paying attention to. I think this is how we start to form our next big move. So it is possible, and just remember this. I mean, this time of the year, we have a Fed rate decision November 1st, which is next Wednesday. So if the market holds 420 and we end up coming back into, that kind of this area in and around the Fed, it would make some sense if there's some indecision, and then the Fed is going to have to give us some type of break one way or the other. The Fed could launch, another like crappy sell campaign, or the Fed could launch the, year-end Santa Claus holiday rally. So I will probably position myself accordingly for it because that's what price is going to do. It's like price will find a way to go up, down, sideways. I can position for it, carve out net profits. That's probably what I'll do. Earnings-wise this week, we're going to take a look, maybe a play on Meta, a play on Amazon, some of those bigger moves, depends on how expensive they are. But we might look at a long strangle and see if, we can get some bigger levels priced in. I mean, Netflix, I think last week moved $60 or so just on the weekly candle. Tesla, I think, moved like $50 on the weekly candle. So, and we were calculating it out to be like 22 to $25, based on averages and based on earnings history. So if we can have some excess volatility, that would help us a lot for our earnings plays. Okay. So, all right, it's 10:02. I'm going to wrap it up here for the day. If you do me a favor before you leave, will you click the thumbs up button for me, like the video, and comments are appreciated. QB, you're welcome anytime. Just take it easy on the quantity of comments. Yeah, I do answer questions. I just don't like it when it feels like it's being spammed. Okay. All right. Thanks, everybody. Equities on Demand students, I'll see you in a few minutes. We'll have a good week in the trading rooms. Flex. Before I go, I want to post a Discord link. So here we go. Discord group. There we go. And a couple things on Discord before I go. I posted this last week, talked about it on Friday. Anything I post on YouTube will pop up here. I'm going to do an options overview video this week. So just kind of showing, look, these are the strategies I focus on and trade. I'll explain each one. And I think that's, I don't know, the way I explain options is probably a little bit simpler than if you've ever seen the pictures where it's like, here's the stock price and here's the movement, and here's the expected payout, and here's the risk. I hate those graphics. I don't think they make any sense at first glance. They're not really intuitive to read. So I'm just going to say, look, here's 5 strategies I trade. Here's what happens. Here are the pros and cons. And I'll do a video on that and add it to my YouTube channel. So when that pops up and it's published, you can check it out on the video on the youtube.com/Chris Pulver channel. And I'll probably put it in the Trading 101 video series. Also, any education you're interested in, if you'd like to join my trading rooms, I got a trial for a month. Trade Forex with me Tuesday, Wednesday, Thursday every week. Trade stocks and options Monday through Friday. And then any class, some stocks and options, some Forex, some with automation, some discretionary video series. That's all about market mapping, price structure, and then also if interested for some private instruction, some 1 hour and full day workshops. So you can check it out. Just jump into the Discord channel, and that is that. So well, that's it. Happy Monday. Let's kick some butt this week, and let's see what the market's going to give us. I'll see you in the trading rooms. All right, thanks everybody. Bye.